Today I'm going to be talking about inflation. Inflation's a hot topic in the news and at the water cooler. And this video is going to explain to you how apartment investing hedges against inflation. So what is inflation? Inflation refers to really a progressive increase in the price of goods and services in the economy. So when the general price level rises, each unit of currency buys fewer and fewer goods and services. So let's kind of look at some concrete examples. In 2010, a carton of milk cost $2.78. In 2021, that same carton of milk cost $3.79. So what happened there? Inflation happened. When you're looking at a dozen eggs, in 2010, it cost $1.47. And in 2021, that same carton of a dozen of eggs cost $1.82. Again, what happened? Inflation happened. So really, the products go up in price. As they go up in price, you have less purchasing power with that same dollar that you had in the past. That dollar that you had buys you less stuff. So for perspective, in 2018, the inflation rate was 2.44%. And now, from October 2020 to October 2021, the rate of inflation has jumped to 6.2%, which is mind-blowing. It's one of the highest rates that we've had in decades. So what does that mean? That means that cash sitting in the bank, in your savings or in your checking account is actually losing value at 6.2% a year. You know, I used to be one of those people that would find comfort when I would open up my online portal to my bank and I would see a large sum of cash in the bank, and I would feel just like, oh, okay, I'm going to be fine. Now I see that, and now I know better. Now I see that, and I'm like, oh my God, that money is losing value. You know, Grant Cardone has a great quote. He says, cash is trash. And, you know, after really learning about inflation, and I have to say that I agree with him. So what can you do to hedge against inflation? There's actually quite a few different strategies. However, I'm going to only be talking about real estate investing and how real estate investing is one way to shield yourself from some of the inflation's effects. So why does real estate, in theory, help with inflation? Well, as the rents go up and the properties go up in value or they appreciate, the loan to value lowers, acting kind of like a discount. So the equity in the property increases and the mortgage payments are actually remaining the same. So the leverage is fixed. Another way that real estate hedges against inflation, well, think about it. As the residential home prices go up, inflation makes the prices go up even further. This actually drives people into the renter's market. So more people need to rent, which therefore increases the demand and really pushes that organic rent growth higher and creates a cycle where the value of the property goes up and up and up. And in general, real estate appreciates over time. Unlike the stock market that goes up and down and very volatile, usually real estate goes up and there's a steady upward curve, and that can go alongside inflation. And the last way that really real estate hedges against inflation is by the cash flow it generates. Cash flowing rental and real estate investments can provide this recurring income for investors that can either keep up with the pace of inflation and even sometimes exceed it. Okay, so we've established that real estate investing is a good hedge against inflation. But did you know that apartments provide an extra hedge? You know, think about it. Since the leases are renewed yearly, really the more units a building has, the more frequently you're presented with opportunities to adjust that rent. So if you have 200 unit apartment complexes, those leases are being renewed on a yearly time frame. Compared to other commercial properties like retail centers, a lot of those tenants sign 5 to 10 year leases. The owners of those properties will be impacted by inflation more than people that are renewing leases on a yearly basis because they just don't adjust the rents. You know, what I love about apartments is really, it's an asset class that makes it very unique because it's in such high demand. People will always need a place to live. If they're working remotely, they're working from home. If they're shopping online, they're shopping at home. They will always need a place to live. And what's happening now is that people can't afford to buy their own homes. They can't afford the down payment. They can't afford the taxes. That's pushing them into the renter's market, making them be renters. Now, there's also a group of demographics that choose to rent. Millennials, you know, they've been polled and they don't want the headaches of home ownership. Seniors as well. They've many times have owned homes for years and years and years, and then there's some deferred maintenance on their homes, and it becomes a huge headache. There's leaks, there's plumbing issues. They don't want the headaches. They sell their homes and they become renters. All of this is creating higher and higher demand. And because there's an increase in the labor and material costs from inflation, there really is a limited supply of buildings and a limited supply of new development projects. So again, this increases the demand and increases the rental rates, which therefore increases the property values. So it all kind of goes together. Really, apartments are a great asset class to invest, really to protect your wealth from inflation and really to protect your future. If you found value in this video and are interested in protecting your wealth from inflation through apartment investing, go ahead and click on the link to schedule your call with me today. Also, be sure to follow me on Facebook and on Instagram.